Professor Fariborz Moshirian is the Director of the Institute for Global Finance at the University of New South Wales and a Professor of Finance at the Australian School of Business, Banking and Finance. And to talk about what's happening in Europe, he joins me now in the studio. Professor, thanks very much for your time this evening.
Good evening.
Firstly, why is Ireland holding a referendum on this question of adopting a new fiscal pact?
Well, out of 25 European countries who are going to be part of this new, if you like, fiscal compact, Ireland is the only country which has to go through referendum, whereas other countries are going through parliamentary votes, if you like, and that's why we have this referendum.
Now, it's looking likely at this stage, with counting underway, it's looking likely that it could well turn out to be a yes, that this is adopted. What will that mean for both the Irish people and the economy, do you think?
Well, basically, Ireland realized in the past that when they said no to more integrated European, if you like, economy, they have suffered financially. They didn't attract foreign investment, and they know that if they have access basically to IMF funds after 2013, they have to make sure they are part of this new, if you like, fiscal compact, and that's why they are quite willing to support this particular referendum.
Now, as an example, throughout the eurozone, particularly in those countries that have been bitterly opposed to austerity measures, how important is this vote beyond Ireland as an acceptance of tighter fiscal financial discipline?
Yes. Well, Europeans have learned from their past mistakes. In 1992-93, they had the currency crisis. We saw, for instance, French franc went down, Italian lira went down in value. As a result of that, they decided to end up all this so-called financial crisis and deal with one central bank in Europe called European Central Bank, one single currency, euro, one inflation, one interest rate. What they haven't done is to deal with the public finance at the time when they decided to have more integration. And so this particular referendum is a signal to say that we don't like all the austerity measures. We want policies which are going to promote economic growth. At the same time, we want to have more integrated eurozone.
It'll be interesting to see how it's accepted. To Spain, let's have a look at Spain. Now, there are reports, we just had one earlier, about money being ripped out of the banks at record rates there, historic levels. You've got a banking sector that is increasingly fragile. You've got a property market that has absolutely plummeted. What can the Spanish government do to pull this out of the flames, or is it going to have to put its hand out for a bailout?
It's a major challenge facing the Spanish government because they have got their own agenda to deal with a so-called deficit to GDP ratio, which it was about 9%. They are trying to bring it down to 3%. In other words, they have to keep cutting expenditure. At the same time, their banking system been suffering over the last several years. And they try to deny that their banks need so-called recapitalization, more funds. And so banks need more money. The government itself is in crisis, and they don't know where to get this fund, if you like. And that's the very challenge that the eurozone is facing. And they are saying now, let's have a banking union system where all member countries could underwrite, basically, the stability of banking system so that people don't pull out their funds, for instance, from Spain and put it in a German bank. And I think that's one of the challenges facing now the eurozone leaders.
Do you think it will have to accept a bailout, Spain?
That is a very difficult issue facing Spanish government. We don't know yet. There are basically some who are arguing that yes, they might go to IMF, for instance. We also know that European bailout fund has got access to some funding for them to the tune of 300 billion if need to. But I think we have to wait and see how the market keeps reacting to what's happening in eurozone.
For a test of the eurozone's confidence, though, to have the fourth biggest economy in the single currency shaking and quivering like this, what a test for everyone.
It is actually testing eurozone. It is testing indeed the entire global economy. And I think that is why European leaders have to come to realization that they have to bring the interest of Europe ahead of national interest. Asian economies are growing. European Union if it's going to degenerate, it's not able to compete with Asia. We're talking about 800 million middle-income consumers in Asia. They have to try to work together so that they can survive in 21st century. It's not easy, but that's a challenge.
When you're talking about leaders, we'll have to look beyond national interest to the greater good of Europe. Are you thinking of, for example, a certain German chancellor?
Not necessarily, because when they end up with single currency, they didn't accept, for instance, German currency as single currency. They said it's euro. It doesn't have national attachment to that. They created ownership for everyone within eurozone when they end up calling the single currency euro, basically, rather than Deutschmark. And I think the same concept could apply when we talk about more fiscal compact and more integrated public finance, that Germany has to accept that she has to create more ownership of the problems as well as opportunities for European countries.
The head of the European Central Bank, Mario Draghi, has said his institution has all but exhausted all the tools in its kit bag to deal with this crisis. He said the system basically has to be restructured. What do you think about that?
I think that is the very issue that Eurozone has to deal with. They have got European Central Bank, which is dealing with only inflation, interest rate. They can assist banks, but they cannot assist governments when they are in trouble. What is missing in Eurozone is if you like, a federal treasury system. In the same way that in Australia we have our Reserve Bank, but we have got federal system, we have got federal treasury. United States, the same thing. They have their monetary system, but at the same time, fiscal policy is dealt with by Treasury. That is the missing link. In the past, with single currency, with Maastricht Treaty, they basically established what is called European Parliament, European Central Bank, but they need more architectures within Eurozone, and that is creating a more fiscal compact through, if you like, a European Treasury.
While we're looking at how the Eurozone may look and function in the future, do you believe it will have Greece in there as well, especially with this fresh election being held in but 2 weeks' time? What's Greece's fate in regard to the Eurozone?
Well, we don't know what's the outcome of the election, but what we know is economically, Greece is not going to be better off if they basically leave Eurozone. Simply because with the new currency, the value of all the assets will decline at least by 50%. They have to increase interest rate in order to finance their deficit, in order to recapitalize their banks, which is basically banking system in Greece is insolvent. And they don't have capacity to increase the exports. At the same time, they have to pay 50% probably more for the imports.
And rippling out, even to us on the other side of the world, and to this region, what are the potential ramifications of the rippling out from Europe into the Asian region? Well,
in the worst scenario, we can compare with what happened during Lehman Brothers collapse in the United States. We have seen during Lehman Brothers collapse, massive amount of funds went back to United States and Europe from Asia and other parts of the world. Question here is, if banking system in Eurozone, for instance, goes down, what's going to be the effect of that on Asia? What we know is Asian countries have more foreign exchange reserves, they have more savings, their banks could be able to replace, if you like, capital outflow from Asia, including in Australia. Asia will probably better weather the crisis in Europe than other parts of the world. Nevertheless, the global economy is highly interdependent. China is relying on European market for exports. And so we have to find a solution where we can create more inclusive global economy.